Hey everyone, it's Christy here from North Accountants, and we're back again for another very quick 2-minute update. Receiving a lot of questions lately regarding the private health insurance changes and specifically how to fill out the tax return this year. So for the 2012-13 financial year, so your current income tax return that you're doing, the private health insurance rebate is being income tested against 3 new income tier thresholds. This means that if you have private health insurance, the amount of rebate that you'll be entitled to receive is reduced if your income is more than certain threshold income amounts, which we'll get to in a moment. But what's important to note is that the income on which these thresholds are based is actually your income for surcharge purposes, which isn't necessarily the same as your taxable income, and that seems to be confusing a lot of people. So what is your income for surcharge purposes? Well, essentially it's going to include your taxable income, which might include family trust distributions as well, your reportable fringe benefits as reported on your payment summaries, total net investment losses. That means that we're going to add back any net financial investment losses and also any net rental property losses you may have incurred. Your reportable super contributions, which includes reportable employer super contributions, which should be reported on your payment summaries, but also any deductible personal super contributions you may have made yourself. Now, as a result of this, some taxpayers who've been receiving reduced premiums throughout the year from their insurer may end up receiving a tax liability. Now, the ATO have made some changes to the private health insurance section in the tax return this year, which will help you determine the amount of the rebate that you're entitled to receive. But you will need to have your annual tax statement from your insurer to help you complete this question. Other changes this year include each adult covered by the policy is income tested on their share of the cost of the policy. Now, this is regardless of who actually pays for the insurance policy. And also, each adult will receive their own statement from their insurer, which will be needed to complete the income tax return. Okay, so your statement from your insurer would look something like this up here. It's pretty self-explanatory. So you're going to copy in your health insurer ID, your member number, your share of the premiums paid. So this is your share in whole dollars of the premiums that have been paid for your policy. So it doesn't actually matter who paid for the policy. If you're covered by the policy when the premiums are made, you're entitled to receive a share of the rebate based on your share in the policy. And your share will be the amount paid for the policy divided by the number of adults on the policy. So if the total premiums were paid at $2,000 and there are 2 adults covered by the policy, then your share of the premiums will be $1,000. Don't enter a percentage here, which some people have been doing. Actually enter the amount. Similarly with your share of the government rebate received. And the benefit code is calculated on the age of the oldest person covered by the policy. So that's how they work out the right level of rebate based on the age of the oldest person. Now, the only thing that you're going to need to pop into your income tax return, which won't be in your private health insurance statement, is your tax claim code. Now, I haven't actually downloaded eTax myself to have a look at it this year, but I assume that there'd be some instruction there on what tax claim code that you should be using. Now, if you took advantage of the ability to prepay your private health insurance for 12 or 18 months in the 11-12 year, you still need to have the private health insurance policy section of your 12-13 tax return completed using the information on your private health insurance statement, and that includes any $0 values. So here's a quick look at the private health insurance rebate income thresholds for the 12-13 year. So nothing's changed if you're a single earning under $84,000 or a family with income for surcharge purposes under $168,000. If you're a sole parent, then you're assessed at the family income rate. Your income threshold is increased by $1,500 for every Medicare levy surcharge dependent child after the first one, and the tier used is based on the oldest person covered by the policy. That's it for me today. Hope that was helpful. We'll see you next time.